Hey everybody, Sive Morten here with the ForexPeaceArmy.com. Let's take a look again on the gold market. As usual, we have prepared the weekly report, so I put link down below to the video description as usual. And actually, with this report, we have estimated a few interesting things that's definitely supportive to the gold market in a long-term perspective, and provided lots of expectations and forecasts from the big banks. So UBS, Deutsche Bank, Commerzbank, BMO, Metal Focus, and actually a lot of others who shared with their view on the perspective of the gold. But in general, if we will take a look really at the big picture, the major concern among the traders stands in a gradual expectations of the gradual rate cut from the Fed. What will happen if the Fed will cut the rate for 1% point by the end of this year? What will happen with the real rates? How it could impact on the carriage rate performance, and so on. Others are actually worried about the possible yield curve control from the Fed. What will happen if they will start buy back their long-term bonds to not let yield to rise too much, because this is hidden quantitative easing already, and it might boost the inflation on the background when the Fed start cutting rates. So it's really a big headache. And if you will take a look at the China and how their reserves are going, you will see that China absolutely do not want to deal with this mess, to make it a headache and trying to suggest what will happen and how the United States will resolve their problems. Just take a look at the long-term chart of the Chinese gold reserves. You will see that vertical line up to the 4,000 tons currently. So they have made their choice, and this is big signal to all of us what actually to expect. Second issue, for instance, we already estimated that Fed, or better to say United States Treasury, already applies the yield curve control. But in the current circumstances, when the yields are not really moving too strong to the upside, it demands not a big amount of money. 2 billion here, 3 billion there, and in general they could keep rates in some range. But what will happen when the sell-off and demand for the higher yields on the long-term curve will increase? So this is the real point that everybody are worrying about. So these questions were actually discussed in the report, and taking a general look at the gold performance, and actually make the conclusions. So what to expect in the long term. So if you're interested in that, you could read. It's not really very long. It's a lot of charts there, so it will be a pleasure to read. Speaking about the technical picture, recently gold just jumped out of the long-standing range, right, with this pennant. And every time when the gold or any market is breaking on the free space, investors expect that it will keep going higher to the particular targets, and they do not want to see that market will return right back down. So that's also we do not want to see. Otherwise, if it will happen, as it would with any other market, it means, first of all, downside action, actually break out in opposite direction, and suggest deeper downside retracements. So currently, these are the things that actually nobody wants to see on the gold. So everybody expects that market should keep going to the next destination points, which stands around 37, 34. But speaking in the big picture that we have on the monthly chart, on the yearly chart of the gold, next target actually is around 37, 75. So that's our view. We are coming on the Fed week. And since gold market stands overbought on the weekly chart, it has some problems, technical issues, a technical barrier for immediate upward continuation. It needs some support, needs some push higher. So we hope that Jerome Powell will be able to provide this push. If even 25 base point will be just the change of the rate, since everybody now expect, and market in general expects, that the Fed will keep going rate cut until the end of the year, Powell has to prepare this background, because Fed do not like to surprise investors. They usually prepare and explain what they're gonna do. And it means that the change of the speech of the Powell this time should be quite different compared to what we heard within the recent year probably, or even longer. And by itself, the change of the rhetoric might work as good as actually another 25 base point cut. So it might be something stronger and better than just 25 base point cut. From that standpoint of view, gold indeed could get this boost, and it's really good trying to complete and reach 37.34 target. Maybe not particular on Tuesday and Wednesday, but it might be some lasting effect, and it could keep going for some period right to this target. So that's why on the daily chart, I do not see something actually to change in our view. We have great thrust. Market stands for a whole week in a tight range, which is also maybe indicator of the bullish sentiment. This market doesn't show even minor pullback, minor retracement. It stands tight. So it might be the sign that it's building an energy and preparing for a possible breakout. It means that on the hourly chart, probably I do not see actually any reasons to drop this. And I think that we should just keep going with the plan that we already have. On Thursday, Friday, we discussed this possible reverse head and shoulders pattern. On Friday, we said that you already could consider possible position taking if markets start dropping lower, approximately around 36.20, 36.30 area. If you have taken some minor part of your position, because every time we're called to split the position in parts, to take position gradually. So if you already have taken some part of this position, that's great. Just keep it and see what will happen. If you haven't taken anything, here's some issues that you could keep an eye on. First of all, we have minor ABCD here. This first OP stands 36.35, XOP 36.23. So it stands around 36.30, 618 support, and very close to the symmetrical left arm right here. So that's the point. That's an area actually where we could think about position taking and be preparing, start preparing for a possible reverse head and shoulders, possible upward action. What the risks with this trade? If market starts breaking 36.20 area, that might be a bad sign. In this case, chances that market taking out of these lows could increase and just could drop below it. That's why our task is to get the position as close to this level as possible. But this choice is up to you. If you do not want to split, you could you would like to try the B spot on and take the point, take the position right in reversal point. That's great. So it's totally up to you. In general, this actually doesn't change the overall plan. On the 4-time frame chart, we have the minor bearish grabber has been formed. Actually, you do not see it on retail broker chart, but if you take a look at the futures, you will see that it exists. By itself, this grabber brings no problems because its minimum target stands below these lows. And that's actually what we would like to get on the hourly chart. Drop below the B points, reaching the OP or even slightly lower levels. The problems could start if, as I said, markets start dropping below 36.20. In this case, it means that market could decide to spend more time inside this flag consolidation, and it means that it keep going lower to lower borders somewhere around 36 even area. So it's a bit longer term fluctuations around the flag. It will not break the overall bullish context, but it just means that the idea of the reverse hand shoulders has failed. That's all. So from that standpoint of view, as I said, we need to buy as close to this level and corresponding place to stop. Nominally, the invalidation point for this pattern stands below the 36.12 right there, but maybe it makes sense even to use tighter stop closer to 36.20, 36.19 area, where actually it already will be seen that this pattern is failing, especially if we will get some kind of acceleration down this way. So if you will see on Monday just nasty black candle right down, definitely do not take any long positions. So we need to get some gradual, relatively slow, something like this, gradual action to the targets that we have specified. So in 2 words, actually that's our view on the gold market. In fact, guys, we do not have a lot of options here. Personally, I do not see any other patterns, so probably we will have to deal with the things that market provides us because we do not have any other choice, either to deal with it or not to deal. That's actually the only option that we have. So let's see what will happen on Monday and return back to this question on Tuesday.